So in today's webinar, we are going to take you through the interest calculation feature, which is available in TallyPrime. So there might be different business scenarios wherein interest calculation is applicable and you might be charging interest to your customers, right? So we'll take you through the scenarios which has been supported in TallyPrime and how you will be able to configure these settings, and you'll be able to start managing the interest calculation in your data. During the session, if you are having any questions, please feel free to share. I'll be able to take it up either during the session or at the end of the session, and I'll be able to clarify. Okay, so let us proceed with the scenarios in calculation will be applicable. So here you can see one of the scenario, right? So my company is National Traders. So they have issued an invoice to Excellent Traders. So since the customer has not given the payment with the due date, right? So there is a late payment done by Excellent Traders to National Traders. So in this particular scenario, what National Traders are doing, they are charging the interest on the late payment. So basically, most of the credit bills will be having the due date, so within which you are supposed to clear the bill. So if it is not been cleared within the due date, then obviously what businesses will do or the suppliers will do, they will be charging the interest, right, on the late payments. So in TallyPrime, we do have the provision to configure this. So either you can charge or being charged, right? So both the scenarios will be able to handle it in TallyPrime. So here we have taken up the scenario wherein on the late payment, the business would like to charge the interest. And another scenario would be if you are taking a loan from the bank, right? So obviously that becomes your current liability because you have to repay that loan amount to the bank. So even in such scenario, whatever the interest is being charged, if you know the interest rates and if you want to automatically understand, generate the interest on that, so that reports will be available. So even in such scenarios, you will be able to manage with the interest calculation feature. For example, if you are having bank overdraft account or bank loan account, so on that interest calculation can be enabled with the parameters, and based on the interest rate that you have set, Tally will be able to show you the interest calculation reports. I hope these two scenarios are clear to everyone. Suvarna, we were just discussing about the interest calculation scenarios wherein business will be charging the interest. So first scenario that we discussed is whenever as a business, when my customer is making a late payment, that is not paying within the due date, right? So in that scenario, whatever the invoice value is there, on that I'll be charging the interest. Or there could be scenario that I have made as a business, I have made late payment to my supplier and they have charged interest to me. So in both these scenarios, how we will be able to understand the interest that is being charged, right? So that was one of the scenario. And another scenario could be as a business, you would have taken the loan or you would have done the overdraft from your bank account on which you would like to understand the interest being charged. So if you set the parameters, automatically Tally will show you the interest report so that you will be able to account the interest. So these were the two scenarios that we discussed so far. So now let us see how we will be able to implement this feature, right? So as we mentioned, businesses might need to pay or receive the interest on loans taken or on the invoice late payments. So interest calculation feature will automate the interest calculation, right? So this will show you the report so that you will be able to account the interest accordingly. So let us see the first step. So in order to configure, first of all, what we need to do at the company level, we need to enable in the F11 company features. And also you can see here I mentioned Billwise is mandatory for this. Why Billwise is linked with interest calculation? Because since it is being charged on every invoice, for example, in case of first scenario, right, you want to track the late payments and you want to charge the interest. So in that scenario, there should be some tracking mechanism so that interest calculation feature will understand which particular bill is overdue and which particular bill is not, right? So that it will be able to show you the interest. So that is the reason for using interest calculation feature, Billwise is mandatory. So now let us see. So here for the demo purpose, I've created the demo company here. I hope all of you are able to view my TallyPrime screen. So now, first of all, what we need to do, we need to enable at the company level, right? So I'm going to Alt K company. So from here, I'll be navigating to F11 features. So once I press enter on this, so as it is a part of accounting, so you can see here, we have given the option enable interest calculation, right? So you need to enable this, then only you'll be able to set the parameters in your ledgers. So I'll enable this option. I'll press Ctrl A. So now I can create the masters so that I'll be able to set the interest calculation feature, right? So first of all, I'll take up the first scenario wherein on the late payment, I want to charge the interest. So I'll be creating excellent traders ledger. And since they are our customers, I'll be creating them under sundry debtors, right? So maintain balances bill. By default, this will be enabled. So as it is, you can mention. And here you can see activate interest calculation. So this feature is now, this configuration is now displayed once after you enable in the company features, right? So now let us enable this option, activate interest calculation. So once I enable, this is how the interest parameter screen will look like. So you need to understand what are these options and in what scenarios you will be able to utilize this. So first one is calculate interest transaction by transaction. So you need to enable this option, especially when you're charging interest on the late payments, because one invoice might be cleared within the due date and another invoice might be cleared little bit late, right? So in case if you do not enable this option on all the invoices, the Tally will start applying this interest calculation parameter. So I'll be enabling this option, calculate interest transaction by transaction. Is the first option is clear? Any doubt in this first option? So next option is override parameters for each transaction, right? That means whenever I'm applying the interest for a particular invoice, right? So I'm setting in that invoice that you need to calculate interest on this particular transaction if there is a overdue payment, right? So I'll enable this option. And in case if you want to override interest rate, for example, for one particular customer, for one invoice you have charged 10% and for another invoice you have charged different percentage. So in that scenario, if you want to override the interest rates during the entry level, you will be enabling this option. So advanced parameter we have not yet enabled. So currently we are taking you through the simple parameters. So in Tally, to charge the interest, we have two different parameters. One is simple parameter and another one is advanced parameter. So on the same screen, if you want advanced parameter, you can press F12 and you can enable this option. So currently I've enabled this option. So you can also set it as no in case if you want only the simple parameters. So simple parameter means what? You will be just able to apply one specific interest percentage on all the particular transactions. So if you want to give advanced parameters like if conditions you want to configure, like it should be calculated after the due date or voucher date is different and you want to give different effective date to calculate the interest. In all such scenarios, you can enable advanced parameters. So now let me enable advanced parameters by pressing F12 configuration. Include transaction date for interest calculation. So you will be enabling this option. Consider an example that you have made a sales to excellent traders, okay, for amount of 50,000 as on 19th of July today. So invoice amount of 50,000 was there. So what the party did, 20,000 rupees they paid us today itself. So what is the pending amount? 30,000 is the pending amount, right? So only on that 30,000 rupees, whatever is pending, if that becomes overdue and they have not yet paid, only on that 30,000 rupees, if you want to charge the interest, right? In that scenario, you'll be enabling these two options. Otherwise, what will happen? Tally by default, it will check the value of the invoice and on entire 50,000 rupees, it will be charging. So it again depends on the business practice and whatever the agreement that they are having with their customer, that even though there is a late payment, whether interest will be charged on the entire invoice amount or it will be charged on the pending amount which is overdue, right? So based on that, you can enable and disable these two options. Are these parameters clear so far? Any questions? Okay, so Vikas ji is asking same parameters for bank interest. A little bit there will be a differentiation, so we will take you through the bank ledger also. So currently we'll look at the party ledger scenario, right? So now I'm just charging here the interest of 10%. So once you press enter on this, so here you can see the different interest types. So currently we have 4 different interest types based on which you want to charge the interest, right? So if you consider 30 days per month, then even though you are recording the transaction as on 1st of May, for 30 days it will consider and it will be charging the interest. Similarly, if the interest has to be calculated based on calendar month, that is irrespective of 30 or 31 or 28 days, so based on that, it will pick. So whether it is a yearly interest charge, so you can select year parameters over here. If it is a monthly interest charge, you can select the monthly styles over here. Currently, I'm selecting here calendar month, and here I'm selecting on all balances. Or in case if this is a particular party is under debtors, right? So only on their debit balance it has to be charged, because sometimes you will be having credit balance from the party, especially when you receive the advance payments from the party, there will be a credit balance, right? So if you want to charge the interest only on the debit balances of the party, which is payable to you, then you can select interest balances accordingly here. So next you can see here applicability. That means from when this particular interest rate has to be levied. Always if you select, what will happen from the first day of the invoice that you have recorded, it will become applicable. So in case after crossing the due date, the interest has to be charged. For example, I have recorded the entry as on 1st of July and I've given the due date till 5th of July. So party has not paid within 5th of July. So he is making the payment as on 10th of July. So between 6th of July till 10th of July, the interest has to be calculated. If that is the scenario, then you have to select here past due date. Is it clear? This particular option. So once you select here past due date, right? So for example, in my scenario, the due date was 5th of July. So do not consider 5th of July, but it should consider from 6th of July onwards. Then here you can mention as 1 day. The grace days, whatever you are giving for a party to still make the payment, here you can mention here. The grace days which you have given, even after the due date, the grace days of 3 days or 2 days or 1 day, whatever you have given to party to make the payment. So those many number of days has to be entered over here. So here you will be getting the interest applicable from. So you can see there are various options over here. So let me explain each one of you. So date of applicability. So if you are going to select date of applicability, then whatever the voucher date it is there. So based on that particular date, the interest will be charging calculated. So from the first day onwards, it will start calculating. For example, if you take a bank loan, obviously from the day one onwards itself, the interest will be charged, right? So they can select date of applicability here. Date specified during entry. So for example, in case if you are specifying any specific date from which you want to charge the interest. For example, you have not mentioned the due date, but you just want to say that after 5 days, you just start charging the interest. So in that scenario, since we have enabled this option, override parameters for each transaction, during the voucher entry, system will give you the provision to enter the interest calculation date. So whatever the date that you have mentioned, from that particular date onwards, it will start calculating. So next one is due date of invoice. So once after party crosses the due date of the particular invoice or reference number, from there onwards, if you want to charge the interest, you can select this option accordingly. So the last one is effective date. For example, as you know that in TallyPrime, we have the option to configure the effective date as well. So if the voucher entry is being recorded as on 18th of July, but effective date is 19th of July, right? So from 19th of July onwards, if you want to charge the interest, then based on that effective date, you can select the option over here. So based on different business scenarios, like how from which particular day onwards or based on what condition they want to charge the interest, these parameters have been given. So accordingly, users can set over here. So in my scenario, it is due date. So I'll be selecting here due date of invoice or reference. Whatever the interest is being calculated, if you want to round off, you can select the rounding here. Otherwise, you can set not applicable. And here you can see here different interest parameters you can set it. So currently, always I just want to charge 10%. So I'm just entering as 10% and I'm accepting this particular party ledger. Is it clear, all these options? The simple parameters and the advanced parameters that appears in the party ledger. Any doubts or any questions? Okay, so we'll proceed now. We'll accept this. I will save this entry. So let me just create some ledgers so that I'll be able to record the transaction. So I'm creating interest receivable ledger also here. So interest receivable means it is an indirect income. So I'm also creating a item over here. Currently, I'm setting this GST as not applicable just to. Okay, so I've created the required masters over here. So now let me just record one of the sales voucher. So this sales voucher I'm recording as on 1st of April for the easy understanding. So I'll select the item here. So here you're supposed to give the due date. Then only system will understand what is the due date, right? Otherwise, what will happen? By default, if you're not entering any due date over here, defaultly, the voucher date will become the due date in across all the reports. So here I'm mentioning 4 days. So 5th April is the due date, right? So as on 5th April, the customer is supposed to make the payment. So now if I press enter, you can see here whatever the interest parameter that I've set in the ledger master, since I have given the option override during the entry. So this particular interest parameter screen will appear. So if you are not enabled that option in the ledger master, then this screen will not appear. So Tally will automatically apply based on the ledger configuration that you have made. So here, in case for this invoice, I want to change the interest rate or any other parameter, you can accordingly apply here. So now you can see here, my due date was 5th of April, right? So due date of invoice, here it has taken 5th April. I'll just press enter and accept it. Okay, so now I have recorded an invoice. So say suppose now the 5th April has come, until now the party has not made the payment, and now we have crossed 10th April also, but still there is no payment. So now what we can do, we can just go to display reports, statement of accounts. So under the statement of accounts, we have this interest calculations, right? So we can just click on this interest calculation. At the ledger level, if you want to view the report, just click on ledger. So here you'll be getting all those ledgers in which you have activated the interest calculation. So now you can see that particular report is showing as blank because currently I'm viewing the report for 1st April. So let me just report this period till 5th of April. It will appear blank because the due date has not been crossed, right? So now let me just apply till 10th of April. So now you can see the interest charge report. So you can press Alt F1 here. So since it is one invoice, it is showing one invoice details here. So once if I press Alt F1, you can see from 5th of April onwards, it is charging the interest, right? So 5th April till 10th April, it is showing me the number of days is 6 and 10% of interest has been charged on the entire amount because within the due date or after this also there was no any partial payment also. So since there is no not even any partial payment on the entire invoice value, the interest is being charged here. So this report will just show you the calculation of interest. It is not that it will be accounted automatically. So looking at this report, you will be able to validate the interest that is being charged and you will be able to record the entry for interest amount due. Is the report part is clear to everyone? Any questions? Okay, can some of you more confirm whether it is clear? How to view the report? Okay, Vikas ji is asking, can we go directly entry of interest from the report? So directly from here, you'll not be able to raise the interest because currently we do not have that option to automate it. So looking at this report, you can create a debit note entry so that since it is an interest receivable, we can create a debit note entry and we can debit the party ledger. So I'll just take you through that particular flow also. But before that, since we have recorded this invoice and the due date is crossed, I just want you all to be clear on the report part. So now I think that within 5th of April, he has made the partial payment of 50,000. So let me consider that. So now what I will do, I'll go to vouchers. I'll go to receipt. Okay. So as on 4th of April, the same customer has made the partial payment against the invoice. So what I will do, I'll record a receipt voucher. I'll select the party. So I'll select here against reference so that I'll be able to track the bill wise, right? And what he has done, he has given me the partial payment of 50,000. So now how much is pending? 1 lakh is pending. So you can see here, current balance of the party now it is showing as 1 lakh here. So now after this partial payment, let us navigate to the report and see how this will be calculated. So are you able to see whatever the pending amount is there, only on that the interest will be charged. That is the reason we enabled in the ledger master that for amounts to be added and for amounts to be deducted, so that Tally will consider whatever is the actual pending amount on that the interest has to be charged. Is it clear how the partial payments will be considered for interest calculation? Okay, Manjul Kumarji is having a question. Can we affect it from last year? So Manjulji, once you enable in the company data, you will be able to go and apply even for the previous transactions, but you need to alter it. So currently it is a transaction by transaction. We are not including all the transaction at once. So for each individual transaction, we are setting the interest parameter. Okay, Meghna ji is asking to repeat the partial payment. So Meghna ji, what we did as on 1st of April, we recorded the invoice, right? And the invoice value was 1,50,000. And within the due date, what customer has done, he has made a partial payment to us of 50,000 rupees. So what is total outstanding amount now? He is supposed to pay remaining 1 lakh itself. And this 1 lakh he has not yet paid even after crossing the due date. So what Tally will do, Tally will consider only the pending amount on which the interest has to be charged. Is it clear now? So if you press enter, you will be able to further drill down to the transactions from this report so that you can view the details. So Meghna ji, here you can see I have recorded sales and receipt voucher. Sales for 1,50,000 and receipt for 50,000 rupees. Okay, Manjulji is asking to verify the interest amount. So Manjulji, here the principal amount is 1 lakh on which the interest is due, right? So 1 lakh into 6 days divided by, into 10%, it will be applied. Because currently I'm doing the report as on 10th of April. Yes, Manjulji, it's calculating only on pending amount because we have enabled that option in the ledger masters. So you can see here, let me just show you why it is calculating only on the pending amount. That is the reason I mentioned that when you are enabling interest calculation feature, right? So based on the business requirement, you can select. So here you can see this option, right? Include transaction date for interest calculation for amounts added and for amounts deducted, right? So since we have enabled this option, whatever is the pending amount, only on that amount Tally will calculate the interest. So if you do not want that, if you want to calculate on the entire invoice value, you can disable these two options. We will cover that scenario also, Manjulji. Paid but delayed payment. So now think that, say suppose the remaining amount of 1 lakh has been paid as on 20th of April, right? So now let us record that receipt voucher, which is a delayed payment. So I'm recording this entry as on 20th of April. So here again, I'll select against reference. So now this is a delayed payment. 50,000 was within due date and 1 lakh was after the due date, right? So this was paid as on 20th of April. So now the bill reference is closed. So let me navigate to interest calculation, ledger. So you can see it will be the pending amount since it is closed. So irrespective of whatever the date that we change the period over here, it will be showing you the total interest amount that has been incurred. Is it clear? So whatever the delayed amount is there, only on that value only, Tally will be charging the interest. Manjulji, please confirm if this is clear now. And some of you also had asked a similar question. So far, the steps are clear. Okay, Manjuji, it will not calculate after the entire amount. So basically, whether you have made the delayed payment entry or not, Tally will still show you the calculation of interest based on the period that you have entered here, right? So it is just a report to keep watching what is the charge of interest that is happening. So with this particular report, it doesn't mean that automatically it is accounted in the books of accounts. It will not show you in profit and loss account. It is just a report to view the calculation of the interest, irrespective of whether you have made the entry or not. But once you make that particular entry and clear the bill wise or knock off the bill, the interest calculation will stop. For example, here I'll give 30th April. So is my days on which it is being charged, is it getting changed? No, right? Because the bill has been knocked off. So at whatever time you go and check out this particular report for the cleared bills, it will calculate the interest only on the delayed amount itself. Okay, Shiv Kumarji is asking, please explain for 5,000. So you want to understand how this 5,000 is displayed over here? So currently it is displaying based on simple interest parameter method. So we have two types of interest, right? One is simple interest and another one is compound interest. One of you also had asked this particular query. So we have the option to calculate interest on both the methods. So currently by default, it is calculating in simple interest method. So compound interest, I'll take it up in further slides. So how it is calculating, just look at my calculator panel. So amount is 1 lakh, delayed amount into, for how many days it is charging, 15 days. And I have taken calendar month, right? So when this particular entry was recorded in the month of April. So for 15 days, I'm charging divided by 30 into 10% of interest. So this is how the simple interest has been applied and 5,000 is getting captured over here. Is it clear, Mr. Shiv Kumarji? Manjuji, 50K it will not consider because 50K have paid within the due date. In my scenario, within 4th April, I made the payment while the due date was 5th. So you can just check here. When this entry was made as on 4th, but the due date was 5th of April. So within the due date itself, I have cleared for 50,000. So it should not consider for the interest calculation. We can't say interest on interest is part of the compound interest. So I request you to wait so that we can demonstrate that scenario as well. Manjulji, yes, the scenario exists. For example, both the payments that you have received is after the due date, right? So based on the number of days the customer has taken to clear the bill, Tally will calculate accordingly. So let me do one thing. What I will do is whatever this receipt I have recorded, instead of 4th April, let me make it as 10th April. Okay, so now are you able to see here the differences? So based on the particular partial amount that has been cleared, based on that, the days will be considered here for charging the interest. Manjuji, I hope this scenario is clear to you. Okay, thank you so much for the confirmation. Okay, Ashish ji, and some of you have asked about the bank interest. I'll take you through that scenario also. First, let us cover the party ledger scenario. So I'm just changing back this particular date. Okay, so now this report is showing me that interest has been levied and this particular bill has been knocked off by the user. So after this, what you are supposed to do, you have to receive this amount from the party, right? So in order to account the interest has been accrued. So what you will do, you have to raise a debit note. So for all the interest payables, you will be raising, sorry, interest payable, you will be raising credit note. And for interest receivable, you will be raising a debit note. So interest check, already we have seen how to check the interest. And to account it, we have to use the debit and credit notes in Tally. So while using these debit and credit notes, you have the option whether you want to retain the simple interest method or whether you want to have a compound interest method. So now let us see where we can enable that option. So you need to create a voucher class for this. So what I will do, I'll be navigating to masters alter. Under the alteration, I'll click on voucher type. So from voucher type, I'll search for debit note. So here I'll be having this particular name of the class option. You can move your cursor. So I'll just mention here as interest receivable. I can give the name of the class as anything, whichever is comfortable to you, you can name it. So once you press enter, here you need to enable this option. Use class for interest accounting. So if you do not enable this option and if you just create this voucher class, it will not be effective. So you have to enable this option. So once you enable this option, you are able to see this second option, right? Amount to be treated as compound interest. So if you want to apply the compound interest mechanism on your invoices, you can enable this option. Okay, and for some particular parties, you want to apply simple parameters, and for some bank ledgers, you want to apply compound interest. In that scenario, you need to have two different voucher classes. In one voucher class, you can disable this option, and in another voucher class, you can enable this option, and you will be able to use that voucher class for bank-related interests. Is it clear? So currently, I want to apply simple interest, so I'm just disabling this option. I'll enter and accept it. So now let me record a debit note. So I'm going to other vouchers. So debit note, here you can see interest receivable class is available. Just select it. So what I will do, I'll be debiting the party. So once you debit the party, here you will get the list of bills on which interest has been charged. So here you can see the balance status also. Tally is showing you whether it is pending or cleared. So you can take a cautious call that once the bill is completely cleared, then you will be recording this entry so that it will affect your books of accounts, right? So it is a business practice, whether you want to apply this on the pending bills or whether you want to keep provisioning the amount for the pending bills, or only when the bill is cleared based on that exact date on which the customer has cleared, you want to charge the interest. You can take a call whether you want to track only the cleared bills here. So I'll press enter on this. Okay, so here if you want to track against the same reference, you can select as against reference and mention the same thing as 1, so that whatever the reference number you have given in sale, same thing can be accrued. Or only for the interest related, you want to give the different bill name. For example, interest 1, you can mention it. Again, on this particular interest amount also, you can start charging the interest if the customer is not paying this within the due date. So this particular series will go on. So you can mention when exactly the customer is supposed to make this payment. So I'll not mention anything so that it will consider the same day. So as I mentioned, even on this amount, if the customer is not paying you on time, you can charge the interest. I'll just apply this. And here I had created earlier interest receivable ledger, right? So I'll be selecting that one. So now let me navigate to display statement of accounts, outstanding, ledger. So you can see here now, since the previous bill is been cleared, right? And I'm navigating here since I've recorded the debit note wherein I have charged the interest. You can see here it is showing interest based on the simple parameter. So this is due now. So if the party is not going to clear on the same day, I will start charging the interest. So now once you receive this particular amount, you can record a receipt and you can knock off it. Or you can record a journal also to knock off this particular amount. So once you just record this particular entry, you can just go to profit and loss account. So here under the indirect income, since we have recorded the interest is due, so it will start showing you in your profit and loss account. And under your balance sheet, working capital, debtors. So since 1,50,000 was the invoice amount and 1,50,000 entire invoice amount has been cleared, 5,000 is the remaining interest amount to be received, right? So the pending amount will be displayed in your balance sheet. So this is how the books of accounts will get affected. Is it clear? Any questions in the first scenario? Okay, so can we navigate to the next scenario wherein we will see how interest will be charged on the bank interest, bank loans for FTR or from wherever you have taken the loan. Okay, Shinoji is asking, can you please show once again the interest voucher entry? Sure. So interest accounting entry, you will be able to record it using the debit note because it is an interest receivable. So if it is an interest payable, then you will be recording a credit note. Okay, so I'll be debiting the party. So once I debit the party, here you'll be getting the bill-wise details wherein against which invoice you want to track the interest will display. You have to select the particular invoice. Amount will come automatically and you have to raise as a new reference here, right? And you have to credit the interest receivable ledger which you have created under indirect incomes. Is it clear, Shinaji? Shama Kular, already I've displayed about the interest calculation from the account of excellent traders, right? So if you navigate to the excellent traders outstanding, what it is showing. So by default, it will show you the pending one. So now we have charged the interest. So it is showing under pending. So once it is being cleared, you will be recording receipt voucher, right? So that that particular interest amount will be cleared. So once it is cleared, what you will do? You will be recording a receipt voucher. Against reference, select the interest reference over here. 5,000 has been cleared. So once it is cleared, what will happen? If you navigate to display, statement of accounts, outstandings, and then the ledger. So here there is no pending amount. It's been cleared. And if you navigate to accounts book, ledger, excellent traders, you'll be able to see all the transactions. Ashish ji, we are already recording this particular session. So after few hours, you will be receiving the recorded link. Shamaji, is it clear now about the party ledger impact? Okay, thanks for the confirmation. So now let us proceed with the second scenario wherein national traders have taken a loan from the bank and they want to charge the interest on the bank. Sorry, they want to calculate the interest on the bank loan that they have taken. So in this scenario, what I will do, I'll be creating a ledger here. Bank loan account, or some of you have also mentioned that you have taken up from NFBC account or it is a FDR, right? So whatever is the particular account in which you want to charge the interest, from wherever you have taken that particular loan or lended the money, you can create that ledger name and you can create it under either it could be under bank account or it could be under unsecured loans or secured loans. So however you want to treat, you can consider the grouping over here, right? So for example, here I am taking loans liability because I have taken up the loan, so I have to make the payment. So I'm taking loans liability here, and here you can see activate interest calculation option is available. I'll enable this option. So once I enable this option, this is how the parameter screen will look like. I've already enabled in F12 the advanced parameters, right? So for amounts added and for amounts deducted, please include it because as and when you keep paying the EMI amount, obviously on the remaining amount, the interest will be charged by the bank, right? So based on the scenario or based on the type of loan you have taken, we recommend you to enable or disable these options. So here, let me give the percentage as 15. So some of you were saying that I want to calculate for a particular year, right? So entire year it has to be calculated. So if the loan amount is going to be charged for the entire year, as we have here 365-day year or calendar year, accordingly we'll be able to select because sometimes because of the leap year, there will be 366 days. So if you can select calendar year, Tally will automatically consider whether that particular year has a leap year or not. Or in case if you have taken some petty loans, right? So petty loans, obviously they'll be charging you on a monthly basis, right? So accordingly, you can configure here. So here, let me select calendar year. So here I'll select all balances. So it's going to be applicable from 1st April. So till date, for example, based on the loan tenure date, you can mention over here. For example, this loan I have taken for only 1 year. I have told the bank that I'll be clearing within 12 months. So here I'll mention as 31st March 2024. So Tally will consider this as to date till which it is supposed to calculate the interest. Sorry, 31st March 2025. Okay, and in case for the same loan for different dates, different parameters are applicable. For example, say suppose I have taken this loan and I have told the bank that within 2 years I'll be making the repayment, right? And based on certain conditions to the banker would have allowed you to pay the interest. First year it will be high and second year it will be lower one, right? So 1st April to 31st March, I'm charging 15%. Or you can say first 6 months. So let me consider 30th September 2024 here. And then it will be 10%. From 1st October, I'll be charging till 31st March 2025. So in that particular scenario, for the same particular ledger, for the same invoice, if you want to track different interest rates for different particular period, so here you can keep on increasing the interest parameter addition. So according to this particular applicable date, Tally will consider the interest rate accordingly here. Is it clear about the bank ledger? I'll be just pressing enter and accepting it. So now since it is a loan, I have received the loan, right? So I'll be accounting this entry. So suppose as on 1st of May, I have received the loan from SBI Bank. Okay, so I have received around 1 lakh. I'll enter and accept this. So now I can navigate to the ledger of bank. So you can see from the first day onwards itself, it will start calculating it, right? So for the bank loans account, if you want to charge it from the first day itself, you can configure it accordingly. So now let me give the period from 1st April till 31st March 2025. So you can see here based on the different rates that I have set. So till 30th September, it has considered 15%, and from 1st October onwards, it has considered 10%, and it is showing me the interest amount. So currently, I have not yet made any EMI amount so that it will deduct that particular amount from this interest. If the configuration is clear. Any questions? Okay, so since we are supposed to make the payment of EMI and along with that we are supposed to also make the payment of interest to bank. So what you are supposed to do in the bank ledger, that is bank loan ledger, whatever the interest parameter that you have set, right? So here you need to ensure that for amounts added or deducted, you need to disable these two options, right? So if you disable these two options, so now what I will do, I'll be making the EMI. So what I will do, I'll be making a payment. So as on 1st of June, every month I'm making a payment of towards the loan. So 10,000 rupees I have made. I have accepted it. Okay. So even though I've paid the first EMI, when I go to display statements of accounts, interest, and then the ledger, so you can see since 1st June, I have made the EMI payment of 10,000 rupees. So from 2nd June onwards, it has considered 90,000 rupees. So on the decreasing amount, if the interest is being charged, then you can apply this particular option. So based on the scenario or based on however you want to charge the interest and to be calculated for the next period, the principal amount has to be what you can accordingly decide over here about the configurations. So once again, I'm going to the alteration of ledger. I'm going to enable these options. How about now? Am I audible? Okay, thanks for the confirmation. Okay, so here we have got a question from Prashantji, where there will be lots of debit and credit amounts, how interest will be calculated. Is Tally going to consider bank reconciliation for interest calculation? Yes, Prashantji, we do have the option to calculate the interest from bank reco date also. So that is provided under the bank ledgers. For example, I'm going to have this UTI bank account. This I have created under, for example, it is an overdraft account, right? So once you press enter on this, whether it is a bank account or bank OD account. So here you are able to see this calculate interest based on, right? Whether it should consider the voucher date or whether it should consider the bank reconciliation date. So once that particular entry is been reconciled in Tally, from that date onwards, the interest will be charged. So you have this option to configure. Is it clear, Prashantji? Okay. So now in order to account the interest value, so what we will do, we need to have the class created under credit note because we are paying the interest, right? So I can go to voucher type alteration. I'll select credit note and here I'll be mentioning as interest payable. And here I'll enable this option. So since it is a compound interest that will be charged, so amount to be treated as compound interest, I'll just enable this option. I'll enter and accept this. So I can navigate to display statement of accounts, interest calculations, ledger. So once I record the interest that I've incurred from 1st May till 30th of September, right? So once after I record that particular entry, that interest amount will be considered under the balance value so that Tally will consider the interest amount also. So currently we have not accounted the interest. That is the reason here you are not able to see the effect of compound interest. So what I will do, I'll be just recording one voucher. So since it is a interest payable, right? So here I'll be recording the credit note with interest payable class. And this entry I'm going to record as on 30th of September. So here I'll select bank loan account. You can see here the interest amount is coming automatically. And here I'll be creating as interest payable ledger, and this will be under indirect expenses. Okay, so now I've accounted the interest till 30th of June. So now let me navigate to statement of accounts, interest calculation, and navigate to the ledger. So you can see here on the remaining amount, that is 90,000 rupees, which I'm supposed to yet to make the payment. 90,000 and 5,000 interest, whatever has been charged earlier, right? So both has been considered for charging the next interest. So the interest will be compounded over here based on the entry that you record for interest. So if you do not record the entry for interest, so by default, it will just calculate the interest on a simple parameter basis. So is it clear now how the compound interest will work in Tally? So it is based on the debit note or credit note that you record. So only after that, Tally will consider that interest amount for charging the compound interest. So because if EMI includes the interest value, whatever the EMI amount you enter, right? So that will be reduced over here. So this particular report will show you on that EMI, on the loan amount that you have taken, what is the interest, right? So by default, if you are just entering, including the EMI amount over there, Tally will not be able to have the bifurcation. So it will consider that as a reduced value. Okay, so I hope all these three steps are clear to you. And types of interest, as I mentioned, we have simple interest and the compound interest. And these are the formulas that we apply so that the simple interest and compound interest will be calculated based on the configuration that has been set in Tally.